All right, guys, welcome to another live stream. Welcome to another live stream. Happy Friday. Happy Friday. All right, so jobless claims hit an all time high. And are we going into a recession? That's the question. Everybody's talking about a recession, and everybody thinks we're going to be entering this big crash. Now, just to be fair, we've been talking about a recession. People have been talking about the big crash for the last 4 to 5 years, and we've never really seen the recession come. Now, we have had things come in place that kind of made it seem like, you know, times were bad, and rightfully so. I would say the pandemic was one of those things that was a bad time. Um, Companies were not able to produce the way they were used to, and that resulted in a lot of people losing jobs, money not being generated for companies. So yeah, that was something that happened. But even that, we recovered decently quick. It wasn't like something like 2008 where it was like lingering. I mean, again, the virus and the pandemic did linger, but from an economic standpoint, we bounced back pretty quick. So fairly quick, right? Compared to other situations in the past. So, yeah, I think that um, it just depends on how you look at it. I think most people, when they see a red day or they see a top company report crappy earnings, like for instance, I think it was Intel, and I'm not sure if it was. I think it was Intel and some other company that reported really bad earnings or they missed it by a lot. I think Intel fell by like 20%. Even Nvidia was taking a hit. Now, Nvidia's earnings is not until end of August. So, yeah, but I'm kind of like forecasting what that's going to be like, right? Because if Intel's already missing their numbers, missing their targets, then it's setting up for Nvidia to do the same thing. And you got to remember, Nvidia is like a 3-4 trillion dollar company, and it's leading the space all over. Like when it comes to the number one stock, the number one play everybody's looking at Nvidia. So it's kind of running the stock market. Um, and if Nvidia misses earnings by a little bit, and like I said before, missing earnings or doing slightly bad is going to be taken real negatively by the market because they're used to, you know, going 200% above expectations, 300% revenue above expectations, because Nvidia has been setting that standard for itself, and it's just hard to top that every quarter. So I think it's I think it's setting up for Nvidia to report okay earnings, and I think that will lead to the stock taking a crash. Because, like I said, if you look at the chart, it's very overextended, and yeah, I think that's one of the stocks that I believe will take a dip soon. And but I don't think we're going to be going into recession. And again, it just depends, right? Like the jobless claims. I was reading this article, and let me just click it really quick. I'm not going to share my screen, but it says the number of Americans filing for jobless claims hit highest level in a year. I've been seeing a lot of people in the IT sector get laid off, and I'm not sure, and a lot of it has to do with automation, right? We're able to automate a lot of these processes now that we don't need a lot of these IT people. Now, obviously, you still need IT people for certain things. Certain companies need IT people to be around the clock. Hospitals is one of those things, right? You can't have devices or technology go out in hospitals because you're dealing with people's health, right? So that's one of those places. But big tech companies like Google, um, I don't know if Amazon was one of those people too, but big companies like that where they're starting now to automate a lot of their processes when it comes to tech, in their IT support. It's bad for people that are in the IT space. So let's see. It says the number of Americans filing for unemployment benefits jumped to its highest level in a year last week, even as the labor market remained surprisingly healthy. In an era of high interest rate, jobless claims for the week ending July 27th climbed by 14,000 to 249,000. That's almost a, you know, 18 to 20x increase in jobless claims. That's a lot, right? From 235,000 the previous week. Oh, never mind. So it was 235,000 the previous week, and then it jumped to 249,000. So it's just a 14,000. But still, that's still a lot. 14,000 people losing their jobs. It says the Labor Department reported Thursday it's the most since the first week of August last year and the 10th straight week that claims have come in above 220,000. Before that stretch, claims have remained below that level in all but 3 weeks this year. It says weekly unemployment claims are widely considered as representative of layoffs. Though they have been slightly higher the past couple months, they've remained historically healthy at healthy levels. So they say it's still at a healthy level, but it's increasing. It says stronger consumer demand and resilient labor market has helped to avert recession that many economists forecast during the extended flurry of rate hikes by the Federal Reserve that began in March of 2022. So I think they're saying we're basically seeing the after effect of those rate hikes now. And that makes sense because even when they were doing those rate hikes back then in 2022, up until 2023, I think they paused it towards the end of 2023. And then, it's been steady ever since. But even when they were doing that, a lot of people were saying you won't see the effects of those rate hikes now, right? You're going to see the effects later. And now I think that's what we're starting to see. We're starting to see a lot of, jobless claims now. Because interest rates go high, companies at that time weren't able to borrow money. In turn, they weren't able to produce. And if you don't produce, you can't pay your people like the way you used to pay them. So what do most companies do? Most companies go out and lay off people. So yeah, that makes sense that we're seeing that effect now. Now, however, I think as far as a recession and the way I think about the recession is how it pertains to my investments, right? So I'm in crypto, right? Now, if we look at the stock market, there's a lot of stocks that are overextended, Nvidia being one of those stocks. Like Tesla, I think Tesla took a dip and it's going on the way up. I think it's like 220, 230. I think it's all-time highs after the stock split. It was around 330, 400 area. So I think it's going to be selective assets that take a dip. Those that are extended, and then two, those that are, I wouldn't even say affected by the jobless claims. It's not. I think companies are going to do when they lay people off. That's going to be more money in their pocket. So that's really not going to affect the companies per se. So when we define recession, I don't really think it's going to hit assets like stocks that much. And I don't think it's going to hit scarce assets like crypto. Specifically crypto, I think crypto is going to thrive in a recession. One is because we already been in a long bear market when it comes to crypto. Crypto has a 4-year cycle. After the Bitcoin halving is when prices go crazy for crypto. And we're already close to 5 to 6 months after the halving, and altcoins already have taken a beating. So I mean, they could go down a little bit lower, but again, the farther we go away from that Bitcoin halving, the closer we get to an altcoin season, the closer we get to BTC hitting a new all-time high. Now, I think in August, maybe we'll still see a little some bleeding. But you got to remember, we're going to get a rate. Most likely, we're going to get a rate cut in September. So that for me is going to ignite growth stocks, growth assets, scarce assets like crypto to shoot up. So I don't think, I think it's going to be a version of a recession. Again, I think also a lot of what's contributing to it too is the credit card debt. A lot of people are in credit card debt, high interest rates, and I believe they're variable rates. So if they cut interest rates, it should help, right? The thing that's going to help if we do go into a recession, it's going to be the Fed cutting interest rates at least 2 to 3 times this year, and then be really aggressive with it next year. If they do that, they could probably tame it for a little bit, and we'll have we'll have that boom. For sure, we're gonna have a boom in crypto. I think crypto is becoming an asset class that acts on its own. Like before, it depended on rate cuts. It depended on the whatever the stock market did. But I think it's now that it's in almost like an institutional asset. I think, and it's scarce, right? I think it's going to act on its own. And like I said, going towards the end of the year, I think we're going to see a new all-time high in BTC. So if there's a recession, I think crypto is going to thrive. And I think selective assets in the stock market will thrive. For instance, Amazon is one of those things where people are probably still going to be using during a recession. I mean, people don't have money, but I see people out spending. They're out at restaurants. They're buying clothes. They're taking trips and things like that. So it doesn't really stop people. Now, could we see something where the credit card debt gets so high that people start defaulting? Because remember, credit card debt is not like student loan debt. You can default on your credit card debt, and pretty much you don't need to, nothing's really going to happen to you. Now, obviously, your credit score is going to take a hit, but it's not like student loan debt where you have to pay it off, and you are responsible to take care of that that balance that you have in your student loans. So, yeah, I don't know. Everybody, again, when we have, every time we have a red day in the market, people are always talking about a recession's on the way. I mean, we've heard it for the last 3 to 4 years. And, I guess a recession is different for everybody. But if we look back at 2008, I mean, we almost saw 70 to 80% crash, within weeks. So if we don't see anything like that, then, I don't know if we can really consider that a real recession. Maybe a mini bear market. Maybe that's more fitting for what's going on now. But like I said, the further we get out, I can tell you this, the remainder of this year, maybe not August, but the remainder of this year and then the beginning of next year, it's going to be real bullish for crypto. So if we're going to go into a recession, maybe it's towards the end of 2025. And again, we do have an election year. So the market, they make the market look good. Again, the market's manipulated. So every time we go into an election year, they want to make the market look good. So I think that here's my prediction, and everybody needs to do their own research, but I think maybe we see a little more bleeding in August, but as towards the end of August, going into September, as we get that rate cut, and maybe even sooner than that, because people are going to be anticipating it, the market's going to shoot up. Specific assets that have a use case, that have a good company, a good narrative, are going to do well. And companies that, are really haven't been doing well are probably going to take the biggest hit. Most of those things are like airline companies. People start taking less trips. people still spend in their city, but people start taking less trips. So those are kind of like the industries that get hit. Airlines, travel, hotel, stuff like that are the first ones to see the hit. So yeah, I think going into the end of August, we start seeing the push up. I think going towards the end of the year, as we get more rate cuts, we keep pushing up. I think some stocks may make a new all-time high. I know crypto for sure. Some altcoins are going to make new all-time highs. I think we see 100K BTC by the end of the year. And yeah, people are losing jobs. We feel bad for them, but it's I don't think it's because of companies doing bad per se. I think it's because a lot of automation, a lot of AI is taking over. It could be in some other industries that people are just losing jobs because the company is not doing well. But I think for most cases, it's a lot to do with the automation that's going on, and people are just being replaced, right? But yeah, that's my take. I don't think we'll have a recession, or at least a severe recession. I think maybe we go into a little bear market for a couple of few weeks, and if specifically crypto market, I don't think, maybe a couple more weeks, but I think we're soon going to see new all-time highs for BTC. And yeah, that's my take on it, but we'll see as we get updates. We'll see how it turns out. But yeah, that's pretty much it for me today. Make sure you guys go follow me on TikTok, Financial Nutrition, Instagram, Mr. Financial Nutrition. I post during the week, Monday, Wednesday, Friday, and Sunday. I post at 11 a.m. and to 12 p.m., but somewhere around that time. Also, I may start switching this Friday live stream to Sunday. So if I do switch and you don't see me posting on Friday, it's because I'm going to switch to Sunday, just because I think more people can tune in Sunday, and Friday most people are out. But who knows? I may keep it here doing this on Friday, but I might just change it to Sunday. But yeah, take care, and you guys have a good Friday.